Welcome to our channel. Today, we're diving into the world of investing and discussing the top 10 stocks you might want to consider for long-term growth. From tech giants to healthcare leaders, these companies have proven their worth and continue to invest in innovation. But, as always, investing comes with risks, so we'll also be discussing the challenges you should consider before deciding to invest in these stocks. Let's get started with our first stock. 10. Visa Incorporated, V. Reasons to invest. Visa is at the heart of the global shift towards digital payments. As more consumers and businesses choose digital transactions, Visa offers a solid infrastructure to capitalize on this trend. With a broad network and strong partnerships in the financial sector, Visa is a dominant player in the payment processing industry. Risks. Despite its strong position, Visa must navigate complex regulatory landscapes, especially in international markets. The rise of fintech companies offering innovative payment solutions also poses a threat to Visa's market share. 9. Johnson & Johnson, J&J. Reasons to invest. Johnson & Johnson is a symbol of stability in healthcare. With products ranging from consumer goods to pharmaceuticals and medical devices, the company has a strong and consistent revenue stream. Innovation in their R&D department ensures that there are always new, potentially profitable products in the pipeline. For investors looking for reliable dividends, Johnson & Johnson offers an attractive yield. Risks. The company, however, faces significant legal risks, particularly concerning liability claims in the pharmaceutical sector. Additionally, increasing regulatory pressure in the healthcare sector could impact Johnson & Johnson's profitability. 8. Meta Platforms Incorporated, Meta. Reasons to invest. Meta, with platforms like Facebook, Instagram, and WhatsApp, has a massive global user base that allows the company to operate a highly lucrative advertising model. Additionally, Meta is exploring new technologies and has heavily invested in developing the metaverse, which could be the next big step in digital evolution. Risks. Meta is under intense regulatory pressure worldwide, especially regarding privacy and data protection. Competition within the social media sector continues to grow, and if Meta fails to remain relevant or adapt, it could weaken its position. 7. Berkshire Hathaway Incorporated, BRK.B. Reasons to invest. Berkshire Hathaway, led by Warren Buffett, offers investors access to a broadly diversified portfolio of companies, ranging from insurance to railroads and consumer goods. The proven leadership capabilities of Buffett and his team ensure a solid long-term investment strategy focused on sustainable growth and value creation. Risks. A major risk for Berkshire Hathaway is its dependence on Warren Buffett and Charlie Munger. Since both leaders are of advanced age, there is uncertainty about the future leadership of the company. Additionally, external market factors can have a broad impact on the diverse companies within Berkshire's portfolio. 6. NVIDIA Corporation, NVDA. Reasons to invest. NVIDIA has established itself as the undisputed leader in graphic processing units, GPUs, with applications in gaming, artificial intelligence, AI, and data centers. The demand for their products continues to rise, especially due to the growth of AI technology and high-performance computing. NVIDIA continues to innovate and expand into emerging sectors such as self-driving cars. Risks. NVIDIA's high valuation can make the stock volatile. Additionally, the company remains heavily dependent on a few key markets, such as gaming, which could pose a risk if these markets were to cool off. 5. Microsoft Corporation, MSFD. Reasons to invest. Microsoft is a tech giant that has expanded its dominance into cloud computing through Azure, alongside its strong position in software and hardware. The company has diverse revenue streams, from Office and Windows to Xbox and Surface, and remains financially healthy with consistent growth and strong dividend payouts. Risks. Despite its strong market position, Microsoft faces stiff competition in cloud computing and software. Additionally, the company could face regulatory challenges, particularly concerning antitrust issues. 4. Tesla Incorporated, TSLA. Reasons to invest. Tesla is a pioneer in electric vehicles and sustainable energy solutions. The company, led by visionary Elon Musk, continues to innovate with technologies such as self-driving cars and advanced battery storage. Tesla has a strong brand name and enjoys loyal customers, which contributes to its growth potential. Risks. Tesla's high valuation makes the stock susceptible to volatility. The competition in the EV market is increasing, with both established automakers and new players entering the market, which could put pressure on Tesla's market share. 3. Alphabet Incorporated, GOGL. Reasons to invest. Alphabet, the parent company of Google, dominates the online advertising market and has various other lucrative ventures, such as YouTube, Android, and Google Cloud. The company also invests heavily in emerging technologies like artificial intelligence and autonomous vehicles, contributing to its diversification and growth opportunities. Risks. However, Alphabet is under increasing regulatory pressure and antitrust investigations, particularly in the US and Europe. Additionally, the company still relies heavily on advertising revenue, which could be a risk if the market changes. 2. Amazon.com Incorporated, AMZN. Reasons to invest. Amazon has grown into the largest e-commerce player in the world and is also a leader in cloud computing through Amazon Web Services, AWS. The company continues to innovate and diversify with new initiatives such as physical stores, streaming services, and AI-driven products. The strong position in both retail and technology makes Amazon an attractive investment. Risks. Despite strong growth, Amazon faces low margins in its retail operations, which poses a risk to profitability. Additionally, the company is under regulatory pressure and faces increasing competition, both in the US and globally. 1. Apple Incorporated, APL. Reasons to invest. Apple is one of the most valuable and respected technology companies in the world, known for its strong ecosystem of products and services. From the iPhone to the Apple Watch, Apple knows how to attract and retain customers by delivering innovative products that perfectly integrate with one another. The company enjoys a strong financial position and offers shareholders stable dividends and growth opportunities. Risks. However, Apple is heavily reliant on the iPhone for a significant portion of its revenue, which poses a risk if sales of the flagship product decline. Additionally, competition in the technology and smartphone markets remains intense, which could put pressure on Apple's market share